Alrighty, traders. Hello, everybody. It is early for me. It's about 6:30 in the morning for me right now, and I thought I'd come on and do a bit of a live stream and talk about some things that I'm seeing across the market that I want to really help you with your trading moving forward into not just for now, but for the rest of your trading career. This has come back off the back of my name is John Howe. I've been trading the markets now for 20 years, and my first 5 years, I found myself $250,000 in debt. Because I had no idea what I was doing. I was trying all different trading systems, and since being mentored by some really good, really successful 7-figure traders, it's put me into the category of actually being part of what's called the 1% of traders around there, the 1% of people that actually do really well out of trading. And my goal through these videos, and especially today, is just to help you think about trading a bit differently. If you want to do this a bit more professionally, then I want to guide you down the path of some things that how we should be thinking about our trading and how we should approach our trading if we actually want to make this an actual trading career. So that's my whole goal around this live stream today. Anyway, all these live streams and my videos, all through that as well too. So let me just bring this up to here, and that's the whole goal through this here, guys. There's a lot of back and forth and you're wrong and I'm right and egos and all that sort of stuff. And I just want to remove all that today. I'm not really focused on wrong or something like that. I just want to share with you guys some things that's really helped me with my trading. Hey, happy Sunday. Where are you from? Oh, from America, right? I've actually just come back from another 5K run this morning. Pennsylvania, nice. So yeah, I just come back from another 5K run this morning. I'm actually getting ready for my High Rocks event coming up real soon. And so I'm starting to get ready right now, which is something that I really want you to think about it, right? I want you to think about this. I have a High Rocks event coming in just over 3 months. But I want to think about this as your trading career as well too. One of the things that I'm always thinking about is we're ultimately going to lead. We're ultimately going to be somewhere in 6 month or 3 months time frame, right? And I always found that wherever we go, we get to a destination in 3 months. Like for me, just over 3 months from now, I'll be competing in a solo High Rocks coming up soon for you guys that know anything about High Rocks. Now, the purpose of me bringing this up to you here is just to share with you a bit more about me personally, but also to share with you that one thing I have found is that it's a concentrated, focused effort on one thing that gets us the really good result, right? So how we incorporate that into our trading is really becoming, and this is where it's hard with trading, right? It's becoming so good at one goal, one thing, one approach, right? Because there's 1,000 different systems out there and 1,000 different methods out there. But one thing that I've found, and if I actually just show you my actual trading results, people want to know what's my actual trading results. These are my trading results, okay? This here is my 2024 equity curve. Now, this is my trading account. I have a trading account and also have a long-term investing account. The long-term investing account is doing really well right now because it's mainly metals and miners right now. But for over the last 5 years, 2020, 1, 2, and 3, that my long-term investing account didn't actually do well at all. It was pretty flat. So what I'm showing you here is my options. I have an options trading account, and this is the trading account that I pull money out of every couple of months to pay bills, pay taxes, and so on and so forth. So this here was my 2024 equity curve from here. Of this growth from here, and this one here is my equity curve for this year. You can see they're actually slightly different. So this one here is this was taken about a couple of weeks ago now. This equity curve here, but you can see the differences in the equity curve. And the reason why I'm starting off with this here is to show you that I actually trade really. I'm an actual trader. This is 2024 equity curve. You can see it's actually a different equity curve here. Now, obviously, I'm not guaranteeing your results if you do anything with me. Actually, you can't do anything with me because my coaching program is closed. If you do want to do anything, then make sure you just grab access to this book here, and that'll actually help you out there. But I want to show you the truth about what actually trading is like. The truth about it, not what we think, okay? Because what we think when it goes down to trading is, I always was looking at trading as a regular income, right? Every week I'm going to make a certain amount of money, and from that I can live off. And because I was chasing that idea for so many years, I was always left behind, right? Then that's where the impatience came from. This is where over trading came from, because my idea was, I'm trying to make money this month. I'm trying to make $5,000 this month so I can pull it out and live off, and so on and so forth. But once I understood the actual truth about the trading, how trading really works through the year, you'll notice this here, right? This is my 2024 equity curve. For the first couple of weeks, it was pretty much flat. And then we had, and then I had a pretty big burn through here, and then it went flat for a while. Now, this here is obviously some losing trades, win-loss ratio, right? I probably had a few losing trades from here, maybe a few small winning trades, and then bam, went through another really big spike through here for a few months. Nice big growth. And then through here as well. So you can see this is my 2024 equity curve, but this year, notice this is my equity curve this year. Now, obviously, every year is different, right? So we can never say every month is going to be the same, because if we're thinking about going into trading about every month is the same, you can see here, this one's taken here, or this one right here, of October the 13th. And then we have this one where we are right here, basically here. So again, this was taken a couple of weeks ago. But I'm showing you these equity curves here, not to whatever about me, right? I trade really well, but I want to show you my goal is to have successful years in trading, right? So how do I have a successful year? And I want to show you this here, because again, this is 2024 and this is this year. Notice something. Now, notice because of the volatility of the tariff situation this year, this is what caused this situation for me for the first couple of months. It didn't really move the needle because so much volatility, right? Now, what did I have to incorporate here? I had to incorporate a lot of patience, right? And this is where the patience side of things, right? Because there wasn't a lot of clear setups for me, and there was a lot of volatility, sometimes it's just stand back. There's a few different trades here that I took here. And so that was there. Hey, Bogdangus 87. I think that's hi mate, how you doing? But notice this here, right? So every year for you, I'm trying to share with you. So next year for me is going to look completely different as well too. Meaning my equity curve. I'm going to have a good year next year, but I don't know how it's going to work out. So notice this here. Notice the first few months, because of the tariff situation, the volatility was huge. So this is where I took some trades, but nothing really moved the needle for me, right? You can see it was pretty flat, up and down, up and down. But then when everything settled and I was patient through this time, then I started to see this big growth. And this has actually come off the back of the last 6 months, really. And then I've had really big growth, right? And again, this is my options trading account, right? So this is my options trading account here that I have, and I'm trading with Interactive Brokers. And again, these are the option trades here. So I want you to think about this for a minute. Now, these results here, guys, I want you to think about this for a minute, okay? These results are coming off the back of me only looking at the market and trading about an hour per day. So that means if you had a $100,000 trading account, over $300,000 this year, and over $300,000. So a $100,000 trading account with these same numbers is over, or between $600,000 and $700,000 in profits in the last couple of years. Now, mine was obviously a lot more than that. If you had $200,000 trading account, then you're looking at over a 7-figure profit here. So, but the purpose of me saying this to you guys is, and again, I wanted to share with you the truth about how trading really is. Okay. And why it's so important to understand the lay of the land, and not every year is going to be the same. And so the wrong thinking that's stopping you from making good money in the markets, by the way, is thinking that your trading is a regular income. I make really good money every year, but I don't know how the year is going to play out for me. And this is a big thing, right? Really, really, really big thing. I don't know if it's going to be like this, where I don't know what's going to happen next year. Is next year going to be like one of these? Again, this is my 2024 equity curve. Is it going to be like this here, where I had a few weeks of not much going on, and then bam, came out of nowhere, had some really successful trades, and then I was off to the races? Or is next year for me going to be something that looks like this here, where I might have a few losing trades. I might have a few winning trades, but they're nothing big, right? They're nothing big there. Now, when I say these are results here, the result of me looking at the market an hour per day, what I mean by that is these results here come off the back of me not looking for lots of trades, but my idea is to get into trades and hold on for big profits. And that's not going to happen all the time, right? That's the best situation there. So I want to set you up for success, right? One of the worst things that I always did. Oh, I think that was a grape or strawberry. I'm having a smoothie this morning. One of the worst mistakes that I did early on in my trading career was going to the market thinking that I can make a regular income like a job in the markets. And when I had that as my forefront, everything else went out the window. I started to become impatient. I started to overtrade. I started to take trades even if there wasn't trades there. Why? Because my thoughts were wrong about this thing called trading the markets. It doesn't matter what system you trade, some months are going to be slow and some months are going to be active, where you're going to get some good trades. And that's just how every single system works. And there might be a few months there where you might not have some big profits, or you might have a few losses. You might have a small little drawdown. Like, look at this bit here, right? I had a big move up to around about 100, and then I had a little bit of drawdown, and then I had a big move back up towards the end of this. Again, this was taken probably about a few weeks ago, about a month ago now. What I'm trying to share with you is that what causes traders to overtrade, and also that lack of patience, is thinking they go into the market to look at this as and this is where day trading is really dangerous, right? I don't day trade. Day trading is really dangerous because the reason why you're day trading is because you're trying to make money every single day. I'm looking to make money every single day. And I've never made really big money in the markets, right? I've never made big growth like this here. This one here over 300% this last year, and this one here. Again, guys, I'm not guaranteeing you're going to do this here. I've been trading the markets for 20 years now, and there's a lot that goes into trading, right, guys? Like, I'm just being real with you here. Like, you know that. It's not a matter of just sign up to a coaching program and learn a trading system and you're going to magically become a really successful trader. There's a lot that goes into it, right? Your patience, you're getting into right trades, your trade management when you're in the trade. How do you manage your emotions in the trade management? Right? There's a lot of things that goes into trading. It's not a get rich quick scheme, right? But if you stick at it, just like my coaching clients, after a few years of sticking at the one thing, you start to become really, really good. And all my coaching clients who are watching right now or listening, you know what I'm talking about here. So the purpose of me telling you this here is, once I started looking at the truth about how this thing called trading really works, I started to understand that it's not like a job, right? Because some months are just going to be really slow, and some months are going to be quite active in the markets. And you just don't know how the lay of the land throughout the year is going to be. And I have found that there are seasons in your trading throughout the year. There's the quiet seasons where there's not much going on in the markets and your trading approach. And then there are seasons where there's quite active and you have some really good setups and things start to pick up from there. So once I started to understand this here, I started to understand that it was more about making big profits on one trade for me than trying to make a lot of small trades. And so therefore my trading results um, exploded when I started to approach a more mentality of I'm looking for results. I'm looking for trades that's going to give me a high probability of having a good move for a couple of weeks to a couple of months. And within that, I can start to really start to move the needle in a positive way. And I just find that one of the biggest mistakes that I made early on in my trading career was trying to make a regular income from this. And from that, that was the thing that was causing me to blow up my trading accounts. I was losing so much money when I first started. I was $250,000 in debt. So if you think about it, I was probably around about $400,000, including taxes, just to get back to break even. It was horrible. It was just like, man, I'm just like, I actually talk a lot about that in this book here that I'm giving away. It's actually based off Jesse Livermore and WD again and so on and so forth. But I just didn't understand. I'm like, where am I going wrong here? What am I doing wrong here? And so I wanted to start off with this session for you guys because I want to give you the proper foundations of how do you have the proper foundation, because you don't have the proper foundations and the right sort of thinking about your trading, then every single year is going to be a guess, right? I know I'm going to have another really successful year next year. Why? Because I'm just trading the same approach, right? I'm not going to get it right all the time. I'm going to get out at the wrong time. I'm going to get in the wrong trade sometimes. But as long as I've got a good foundational approach of how I'm trading the markets, I know that every year I'm going to have a good year. The unfortunate thing is that if people get lucky by jumping in on a good bull market, like they might have been long gold this year or long silver right now, right? You're making a lot of money here, but was that based off skill, as in trading the market? You're a professional trader, it's a skill. Or was it based off you got into a market that has just taken off like a rocket, right? And I would say most traders who are making good money in those arenas right now, it wasn't based off skill, right? Skill is, yes, this was the trading pattern, trading system that I use. And then we can go down the path from there. And I started to realize that the more I had to be really disciplined and stopping myself from looking at all these other shiny objects and become really good at one approach. And then that's when things started to change from there. So just think about that, guys, for you guys that are looking the market. But as I said before, I make a lot of money from trading now because I understand the year, right? As I said before, if you look at this is obviously taken here. This is October 2025. You can see here. There's another updated little screenshot here. And then again, this is this year and last year. And again, I'm trying to show you here of how it's possible to do really well from trading. But a lot of it comes down to our wrong thinking. We're thinking the wrong thoughts in the first place, right? And this is where I find that a lot of traders are trying to be right and wrong with the markets, right? They're trying to be right and wrong, right and wrong, right and wrong with the markets. And so what I mean by that is that let me bring on the actual chart here now. And I find that a lot of traders, they're not trading based off probabilities of something. They're trading based off right and wrong. Yes, I got it right. Like that whole right and wrong mentality. Where if you think about the lay of your land throughout a year, there's a win-loss ratio in every single trading approach, right? So if that's the case, then that means sometimes you're going to get it wrong. That means you're going to have some losing trades sometimes. And that's just part of the game, right? And I find this whole stigma around the markets of this whole right and wrong mentality, where they're saying, you got it wrong, I got it right, like this whole right and wrong thing. But what is right and wrong? Right and wrong is, okay, I trade the market. As a trader, we're not going to get it right every time. We're going to lose some money sometimes. But if you get it right just based off a thought or an idea, like silver right now, which, by the way, traders, I want you, for you guys that know, I actually had a $75 target on silver. I actually didn't expect it to get there, by the way, but I just had a 75 target down the bottom here. For you guys probably, if you guys have been following that for a while, you probably know that. Anyway, so one of the things that I'm finding here is a lot of you traders actually don't want to be professionals. Like, you actually don't want to do this as a job, right? Because if you do, then we need to stop ourselves. Like, then, well, how do I need to approach this thing called trading then if I actually want to be professional, make good money from it year after year after year? What does that actually even look like? And unfortunately, there's a lot of marketing out there, and this is where I have a big stigma around the industry. There's a stigma out there around these markets about teaching short-term trading, and especially like 1 minute charts and 2 minute chart trading. That's even harder. If you're doing that day trading approach thing, and you're trading 1 minute charts and 2 minute charts, you do realize your level of patience in the markets, your level of discipline to say no to a lot of bullshit out there, and your level of consistency to show up every day has to be so much greater than, say, for example, the way that I trade, which is look at the market now per day. And then, because for me, I'm looking for more, how do I get into a trade today? Right? And think about this. This is what I'm always trying to do with my trading account. Think about this here, okay? I'm always thinking about, okay, let's just say, for example, I had a $100,000 trading account, right? And at the end of the year, I want to have a good year this year. So I look at trading like this. Say I have a $100,000 trading account. I'm trying to look for positions where I can take 10% of that, put it in the market, like an option trade, for example. And if I'm wrong with that option trade, I'm probably going to be down $2,000 or $3,000, maybe a bit more, maybe $5,000 at maximum, a big loss for me. That's using options trading here, right? But on the flip side, I want to try to find these high probability situations, no guarantees, where I could potentially make 300%, 400% return on my option over the course of the next couple of months. So that one trade that I took with, say, a $10,000 investment, so to speak, over the course of a couple of months makes me $30,000 in that example there, 300% return, which is a 30% growth in my account, right? I'm trying to give you simple numbers here of how to think about your actual trading and how to think about you going into these markets here. But remember, that's a trading approach, right? But that's my mind frame in the markets there. I'm looking to try to find, now again, I'm not going to always get that. I'm not going to always get that, right? Sometimes I'm going to have that loss. Sometimes I'm not going to get that big profit. But this is where, like, for me, I don't look at day trading anymore, because it's always these small profits and over trading and all. It's just so hard, right? It's so hard. And it's so hard to do really well long term every year out of trading by doing that. Because if I take, say, 20 trades, I need at least 5 of those trades to really move big time for me to have a really good year. Which means if I'm going to have, say, 20 trades and say 15 of those are some small losses, some profits, but they're only like 50% profit, maybe 100% profit, utilizing options here, by the way. They're not really, 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 really big movers. Then I need to be in a situation where I can then, I need to be set myself up to have a high probability of having these big moves. And then what happens is I only need a handful of these trades that then really pick up for me, which fortunately for me, It hasn't been like that, by the way. The last 6 months for me have just been incredible. Like the last 6 months for me have just been like, I had a trade on Groupon and that was 300%. I had a trade on Platinum, that was 250%. I had a trade on Ethereum, that was 500% return. I had a trade on SIL and that was 280% return. I had a trade here on silver and got out too early for a 75% return. I had a small loss of 10% on AER, and also had a trade on Walmart, I think it was Walmart, and also Apple. So Walmart, Apple, and AER, I've had some losses, but they were like 30%, 10% losses, and so on and so forth. So, but as you can see, that's the reason why I've had a really good year, especially this year here, because I'm getting in on these positions here where I'm looking for these types of trades. And this is the only way for you to make really big progress. And remember, to make a lot of money in the markets, about getting into something and holding it for a big profit, not trading a lot. More trades doesn't equal more income. And once I started to understand the truth about these markets and not what I thought, because a lot of the times my thinking was wrong. I'm going to day trade. I'm going to trade the 1 minute chart. I'm going to trade a lot. I'm going to make a lot of money. I'm going to make money every single week. Every single thing I just said there was wrong. And it caused me to lose a lot of money. And this is this fascination with day trading right now, short-term trading and so on and so forth. And so I want you to set yourself up to have successful years for the rest of your life. But also, I want you to have a trading style that can fit an overall ideal lifestyle. Wouldn't it be awesome? Wouldn't it be awesome? This is how I do now. Wouldn't it be awesome to know that every year you're going to make a lot of money every year? Now, you don't know how the months are going to play out throughout the year. It's not like make money every month. But you knew every year you're going to make a lot of money. And all you had to do is look at the market maybe an hour, maybe 2 hours a day maximum. And from that 2 hours a day, you can, throughout the year, pick up some really big profits. And from that, then you can actually have a lifestyle as well too. The problem with day trading that I found, by looking at, we're not talking like 1 minute charts, we're talking like tick charts. They're called transaction charts. I remember trading a 44 transaction chart. If you guys don't know what that is, that simply means that instead of a 1 minute chart, which is counted down by time, a tick chart is based on transaction. So one transaction as the E-mini S&P 500 that I was trading. One transaction could be one contract. The next transaction could be 10 contracts. But as it's one transaction, boom. And then as soon as 44 of those, I don't know why this company that I signed up with at the time, as long as the 44 transaction went through, then we use that. The reason why we use that is because we're trading times when there wasn't a lot of liquidity, so there wasn't a lot of bars. So therefore, instead of having 10 1-minute bars go sideways because there's not much volatility there, it only had 2 bars there. Whatever, right? It didn't really make a difference. And I just found that by doing that, I could never be in a situation, I was never in a situation where I could make some really big profits. I can make some good profits, but never really big profits. Because you can never make a really big profit in one day. Well, you guys know, right? It's about holding on things for a little bit more time to allow this big move to unfold and capitalizing on that. Like, for example, silver here, right? The big move out of silver hasn't been getting in and getting out in one day, right? It's been holding on to where it's going right now and so on and so forth. So one of the other things, guys, that I want to talk to you about is this. If you don't understand the lay of the land with the markets, which I'm seeing right now with you guys as well too, I want you to understand that there is always an echo with the strongest market out there. And the noise is always the noisiest with the strongest market out there. And this is the time for you to be cautious. And it's the absolute worst time to buy something. What do I mean by that? Well, think about the lay of the land, right? The best times to be getting into something is not when everyone's talking about it. Like silver right now. Silver is the flavor of the month. Just a few months ago, was it silver? No, it was gold. You guys know this, right? 12 months ago, what was it? It was cryptocurrencies, right? 12 months ago, it was Bitcoin, because it was what? It was going to the moon. So there's these markets out there, and as soon as you start to hear the crowd get really like woo type thing, the professionals see this and understand this is the worst time to get involved with this. From just a sentiment point of view, there's a lot of noise behind that. And secondly, just like with all markets go through swings, right? Doesn't matter what market we're looking at here, whether it's silver or you're looking at gold. Every single market does. In a very big bull market, even just like with gold, what has gold done this entire time? It goes up for a while, have a pullback up, go a bit of time, up for a while, pullback, goes up. It might continue up for a while, and then we go for a pullback. Like, that's what markets do, right? It's not like markets never going to pull back here. And when I started doing videos back here with gold saying we're going to get a bit of a pullback, we did get a pullback. I thought actually a bit deeper pullback. We didn't get that. But we did get the bit of a drop here from here. So if you understand that, and you understand this is the lay of the land here, then you'll understand and I've just done some projections and Fibonacci extensions and all that sort of stuff where I think it may go to, and just looking at some numbers here. Yeah, anyway, let me just see if I can delete some of this stuff off the screen. That's a one-to-one extension anyway. I'm just looking at the extensions there. So just remember that, guys, right? Just remember that. Like I understand the game of the nature, because I know a lot of you traders who trade these markets right now, it's like a casino to you, right? You're looking at like just having a guess, like, oh, I think gold's going to go to the moon, right? And I think silver's going to go to the moon. Like, there's always this flavor of the month. Whatever is hottest in that moment, then the noise is going to come out of there. And this is the worst time to be looking at something. The worst time. Now, if you look through history, when has been the best time to be looking at something? Probably Bitcoin now, right? Because it's like the noise, there's always, now guess what's going to happen in the next 12 months? In the last 12 months ago, it was what? Bitcoin, everyone, YouTube meetup, blah, blah, right? Now, being a professional trader, you just understand that this is the lay of the land of what happens in society. But you do know that most traders who trade the markets don't make money. We know that, right? Most traders do. And the reason why that is because they don't really want to be professional out of this thing called trading. They just want to be able to be lazy, put on a bet, and then try to do well out of it from there. Oh. So the point of this thing here, guys, is that you're always going to have these markets that pop off and just go vertical for some reason. So right now is the absolute worst time to be buying silver right now. Why? Is it going to top out here before it goes for another pullback? Because we know it's going to go through a pullback, right? A pullback is what? Just this thing here. It's what markets do, right? We just know this. This is what I've always talked about, the energy using and the energy building phases, right? Energy using and then energy building and energy using and energy building, and like the different phases I've talked about in the past. Market goes up, energy using, energy building, energy using, energy building, energy using, energy building, energy using, energy using, energy using, energy using, and then energy building. And see what I'm saying here? So like this is what the energy of the markets is really important to these markets. And the reason why I talk about the energy using and energy building phases, because this is what markets do. And I utilize this because I always realized, oh, geez, excuse me. I was always getting in at the wrong time. So I would wait for this here. And then I'm like, oh my goodness, it's going to the moon. I better get in. And then I'd pull back on me. I'm like, why did that happen for? And I'm like, I'm getting in at the wrong time. I'm getting in after it's already had a big move. And so therefore I was always getting in after that there. So if I understand that, the best time to get involved with something is through here, right? Through there and through here. The energy building phases. Because when we go through the energy building phases, it's building energy to go through the next leg. And if you just look at all markets, this is what all markets do, right? If you just look at silver, gold here. Again, this is a few guys that actually want to be professional and be long-term successful, not just lucky or be lucky every now and then or be right every now and then, right? But you want to use these trading techniques for the rest of your life. That's never going to change. That's not based off some fad or gimmick or some bullshit indicator, but you can use some foundational proper things to help you for the rest of your life. This is it here. If you want to get in at a good time, wait for the market to build energy to go for another move. Once again, the market goes through phases. Look at, I'm utilizing gold because gold has just been a beautiful teaching example of how this actually works. A beautiful teaching example. Look at this here. Energy using, just think about the energy using, like a fund manager has got funds, right? And he's using the funds and energy and he's buying it up and buying it up and buying it up and buying it up and buying it up, right? Or you could use this like with me, I'm training for high rocks now. So I could go for a really big training session. And there's going to come a point in time, where I'm going to be tired. I need some rest, right? I need a smoothie, which I just had here, which was oats and berries and protein powder and all that sort of stuff, right? Because I just come back from a 5K run this morning. And then I've got another gym session this afternoon. So my body needs a little bit of rest, right? Now, it wasn't an intense run. It was just a nice, easy run, by the way. Which I got a PR on my Strava thing. But either way, right, I'm trying to share with you, this is what markets do. They get to a point where they run out of energy and they need a bit of reset. They just need a little bit of a refueling. And then we go through what? And then we go through sometimes like this here. I go through a little bit of a drop here. And people think this point through here is when the market is actually, it's in a bear market. Oh my goodness, the market's going down. Hang on a minute. Right, it's just gone through a bit of a pullback. It needs the rest for a bit. It needs to build a bit of energy, and then bam, it goes for another move again, right? And then it might do something like this here, right? Just go sideways like this here, volatile sideways. Hang on a minute, it's not the top. For you guys that are calling top in the stock market, and I don't give a shit what Ron Walker says. You guys in the comment section about Ron Walker, no, I know he's calling the top. We're at all-time new highs. Anyway, I'm going to get to that in just a minute. But this is the energy building phase, right? It's gone through a bit of rest here. It's not a top. It's not a reversal because most of the time it's just refueling again to go for the next move, right? And then what ends up happening is what? Then we go for the next move up here, right? And then we might actually have something like this here. Then we might actually have something that looks something like this here, where it might just go sideways for a bit, like here. But we're slowly going sideways. In a very big, strong bull market, this is what markets do. They just don't go straight up. And the worst thing that I did as a trader was I waited for the market to have a big move. And then I started to look to enter up here. I started to look to end up here, which if this is 0, or should I say, if this is 100, like a full tank of fuel, right? If that's a full tank of fuel, If this is 100 full tank of fuel and this is 0, where we need to stop and refuel for a little bit, call it like the fund managers, right? They're buying it up and buying it up and buying it up. They're like, hang on a minute, I just want to take a bit of profit here. I want to take a bit of profit. I want to get a little bit of funds back here. I've been buying it up for a while, last 2 or 3 months. Let's just take a bit of profit on the table. My training. I've been training really hard now for the last 4 months or for the last 4 weeks. Maybe I need a little bit of a deload week. Or I've been training really hard today for the last couple of days. Maybe I just need a little bit of a rest for 1 or 2 days. Let me refuel again. And then boom, we refuel. And then we go through a refueling phase. The unfortunate thing is that people wait for it to go up for a couple of weeks. They're getting in up here. And they don't realize that they may be getting in the last 20% of the move before we go through one of these phases again, which is what? The energy building phase. And then they get in and then the market goes against them and they think, oh my goodness, why is the market going against me? It's rigged. Like, no. So, and then guess what? And then after this phase is finished, now this is what's called a big bull market. Now, what is this here? This is what? Here, this is what? Major. Let's just use this one here. Low, higher low, and a higher low. This is a major upward trend. And so if anyone in a strong bull market right now, when we're going through just one of these sideways building phases, is calling top, you have a major probability, no certainties, it can be the top, of being wrong. Why would you trade something in the stock market right now? Why would you think something in the stock market right now when you know most of the time you're thinking that thought is going to be wrong? Right? And again, like I know, because the reason I'm saying this is because like in the stock market here, right? So the best times to trade the market is what? Wait for it to build a bit of energy first and then go for the next move. And once again, if you actually look at the actual gold market here for all of this year, the gold has just been a beautiful pattern here to teach us from a teaching perspective, has been this here, right? You've got some patterns here. But look at this here. Goes up, then we go through a phase sideways, goes up, goes through a phase sideways, goes up, goes for a phase sideways, goes up, goes for a phase sideways, goes up, comes back down, higher, low, and then we're doing this thing through here. So at any point through here, this here sideways volatility was not the top. Sideways volatility was not the top. Sideways volatility was not the top. We're still not at the top of the markets. I actually thought we would. I actually thought we were getting towards the ultimate top, which I was wrong. We're wrong about that. And we're still going up from here, right? I do know we're getting towards the end of this overall big move soon. So over the next 6 months or so on big picture. But anyway, from a trading perspective, a strong bull market with a sideways volatility most of the time is not the top. So I just don't, or maybe people don't understand this sort of stuff. That's the reason I'm doing this session for you guys. This is an ultimate session of proper thinking, proper strategies, proper mindset around helping you not just for next year, but for the rest of your life, right? Even if you can't afford my coaching when I do open it up, because it is quite a premium to get access to it, because you're with me every day to the 1% Club, which again, you can't, it's full right now. So it's actually closed. I'm trying to show you right now, help you for free, what's helped me over the last 20 years. And the reason why this is important to understand is to help, because remember, it's all about probabilities, not certainties. If there's a major probability through here that every single one of these big moves and sideways and big moves and sideways and big moves and sideways, most of the time, like we're probably talking well over 70, 80% of the time, it's going to, this is just the refueling phase to go for a big bull market, then why would people be saying right now, how the hell is this any different here? Big move up. What's going on here? It's just an energy building phase. This is not a top. How is this a top? And so, like when I'm looking at this here and I'm looking at these patterns here, let's go to here. Oh, wrong one. Look, it's the same pattern, guys, right? It's the same pattern. It's not nothing new. So what do we have here? Markets had a big move up. Forget the trend lines, forget the extensions. I'm just looking at extensions where it may actually go to if we do start to really see this big melt up, which, by the way, I do see happening. Remember, trade the probabilities, not the opposite. Why would you trade something that has a 20, 30% success rate? Do you see that? Do you understand this? This is what's made my trading so successful, because I just trade the probabilities, not the certainties. And anyone that's calling the top right now is going to be at least 70 to 80% wrong. You do realize that, right? In the last 5 years, there's only been 2 times where it's caused a little bit of a short-term top before we actually had a bit of a correction here. So out of the last 5 years, there's been 2 times it's created a short-term little top. And that's all it was before continuation. So if we just look at this here, remember, trade probabilities, not an idea or any of this bullshit of what people are thinking. And remember, we use the chart for the probability of something, not the certainty. There is no certainties. And what is this probability? Just like here. What did I walk you through with gold just a minute ago? It's the exact same trading pattern. Right? And again, I was just looking at extensions. Extensions, the extension from there to there. And this is where so many traders get it wrong. They're trying to be smart. Well, the economic data and blah, blah, blah. No, I'm showing you a trading, like how these markets work. And if this forms in the markets, most of the time it's going to continue in that trend. And then maybe 20% of the time it's not going to. How are you trading the markets? Are you trading the markets where most of the time you're going to be wrong? No wonder you're blowing up your trading account. No wonder you're losing money. So if I take 10 trades, at least 7 of those are going to be successful and 30% of them are not. Where most people calling a top right now, they're going to be wrong 70, 80% of the time. Because what happens most of the time with these little corrections? Just like gold did. Remember, what did gold do? Every time we had these sideways volatile periods in an ultimate big bull market, it was just a refueling phase to go for the next move, because markets don't go straight up. They need a little bit of a cooling off period. They need a little bit of a resting phase for a while. They need a bit of a let's just reset here. And then boom, they're ready to go again. Look what gold's done for this entire year. Gold is a beautiful teaching example of this thing here that's going to put the odds on your side of being successful. How do you have a successful year next year? By trading the probabilities. So if you're calling a top right now, and I don't give a crap what anyone else out there is saying, you're going to be wrong at least 30% of the time, or 80% of the time, 70% of the time. Did you hear that? At least 70%, I'm being 70, 80% of the time. I'm calling 70% because it's like I'm just using, but still massive high probability. Most of the time, just like gold, when we get these patterns here, it's just a rest before the next move to come. And then, yes, maybe 20, 30% of the time it does top out and we go through a bit more of a correction here. But how are you trading? Are you trading the 30% right and the 70% wrong? Or are you trading, now I'm using 70%, it's probably more like 80%. And if we go back to the S&P 500 and we look at what it's doing right now, again, I was just looking at just extensions up here. Let me remove this extension here. And this is where guys are just like you guys that are trying to be real smart. Up. What is this? Sideways what? Volatile. How is that any different to what gold's done this last 2 years? Nothing. Yet everyone wants to be smart out there. Everyone wants to overcomplicate it and like, well, the divergence and the stochastics and MACDs and all this other crap I'm teaching you one simple trading technique that gives you a massive probability of knowing what the next move is likely to be. Not certainties, high probability. What do I mean by that? When the market goes up for a while and it just pauses here for a few months, it's just refueling to go for the next move. So how are you trading? Again, this is for you guys that want to be professional traders, not for you guys that are trying to be right and wrong with the markets. Right? And again, if you are trading, if you think the market's going to go down right now, you by default have a very low win-loss ratio. Most of the time you're going to be wrong. You do realize that. Why are people, and then by the way, FYI, for you guys that say the market's going to go down, hello, everybody. Hello, everybody. Actually, I'll bring out the candlesticks for you guys. Hello, everybody. S&P just made all-time new highs. This sure looks like it's going down here. Oh, and by the way, look at this here. Low, higher low, breaking these previous highs. High. This is called upward trend, even on the daily charts. This sure looks like the big market melting down. Yep. Good job. Look at the market for what it is. And again, why do most traders, right? Why do most traders get it wrong? Because they're trying to be too smart and too complicated. I'm teaching you a handful of techniques now that gives you a massive probability of actually making money on your trades. And then, yes, some of the times you're going to be wrong and you're going to lose some money. If you have that for next year, you're going to have a good year next year. This is the S&P 500, all-time new highs. Dow made another all-time new highs. NASDAQ is just a few percent off all-time new highs. Russell, all-time new highs. So let me go. I'll go through some questions here, guys. Sorry, I haven't been focusing on the comment section there. I've just been going crazy here with guys. I'm trying to help you. If you actually want to be good at this thing called trading, let's look. Remove this other crap out there that's not helping you. A MACD on the monthly chart's got nothing to do with what's happening in the markets right now. The market's talking to us right now. This is the truth. And all this other crap and data, inflation and indicators and all that sort of stuff is blinding you from the truth. So let's go through everything here. Can you show us that cost chart is starting to change the trend as an example? I'm not sure what that means. Changing trend is actually more like, yeah. Finish my checking on scans and chart. Catch up live here. It's J Hate Live. Hello, J Hate. Let's get to the moon. Oh, hi, John. Had a good year. 2 on silver out now. I've been understanding the market more. Fantastic. Remember, long-term success is not about being lucky in a very good bull market. If you guys have made a lot of money out of silver, gold, or Bitcoin in the last 12 months, or even just silver and gold right now, you're not a professional. You just got one good trade right. I want you to have a trading approach where you can make money most of the time for the rest of your life, not just being right. You think we'll break $100 on silver? I don't know. It's a very big, it's hard because where we are right now. If we look at probabilities, the probabilities is, especially where we are right now with silver, I don't know. All I do know is that if you just look at this moving average, every time we get too far away from the moving average, we go through some sort of pullback. So it may high probability it's probably not going to on this leg. It may go through a bit of a pullback first. So we may get something like this here for a bit first, and then maybe go for another move. Maybe. But we've already had a big move. Melt up, then crash? Maybe. Big crash since Great Depression next year. Again, the piano, if you're a trader of these markets, that shouldn't bother you at all. If it does, who cares, right? A trader is, we trade patterns. We trade the chart. We don't trade what we think is going to come. Like, again, you may or may not be right there. XLE energy building 3-4 years, as you said, exactly right. Still waiting for price to cross over the down trend line. No idea what the cost squeeze pop or why maybe for. Top, mate. This is where you are really going to do your head in, okay? Top spin. Here, I want you to teach something here, okay? If you're not a mechanic and you hop in a car and you push your foot on the accelerator, there's all these little things that happen in the car to make the car go forward. If you're not a mechanic, you have no idea what causes that thing to go forward. You just know it does. You know when you put the foot on the brake, there's all these little things that happen in the car to make the car slow down. Now, even if you did know, does that change the result? No. You put the foot on the accelerator, causes gas. I don't know, I'm not a mechanic. Go forward. It just is, right? So one of the biggest mistakes, Top, is this. There's a trading pattern that gives us a high probability of having a nice move off that trading pattern. That's how we trade the markets. What you don't want to do then is say, well, why is that going to happen for? No idea. No one knows why it's going to happen. We just know it's likely to happen because the pattern tells us there's a high probability of it happening. And why? No one knows, really. And if it does start to form that way and we do start to get the move, the talking heads are going to come up with the reason why, which may or may not be true in the first place. All we need to know is not why something's going to, why is that going to work for me? I don't know. Stop trying to be smart. There's a trading pattern I'm going to give you, and it gives you a high probability of having a successful trade off that trading pattern. The end. Rinse, recycle, repeat, have a good, successful trading career. It's not, remember, the charts give us a good insight to what's coming. I just talked to you about these trading things about with gold and silver and all sort of stuff. So why it's going to happen? No idea why. But the charts give us some insight on what's likely to come next. And that's based off what? The energy using in energy building phases. Donkey Kong's going to get them. Trade with Donkey Kong on your side. Hey, if a guy in a Donkey Kong suit come through, okay, I'm going to buy the Donkey Kong. John, I can bet you're wrong. Ooh. John, I can bet you're wrong. Market will crash next year and we'll pick up around April. Oh, geez. Cool. Well, you know, if you try to short the market right now, one, you're actually losing money right now. Two, the market's at just made an all-time new high after this correction. And three, you're going to be at least 70% wrong on what you're saying there. So good job. I'll keep trading that way. Keep trading that way. I like your trading approach. I like how you're going to be right maybe 30%, maybe 20, 30% of the time. Good job. I like your trading. You're definitely going to be here in the next 5 years from now. You're going to be crushing it in this thing called trading. Good job. I hope hope I've known most of you guys that have some sort of intelligence. And if you've watched this entire thing all the way through, or even if you watch the replay, right, understand what I'm trying to help you here. I'm trying to help you have a successful trading career for the rest of your life. Not being lucky in one big bull market, because bull markets come and go. Big spikes come and go. A couple of months ago, it was gold. 12 months ago, it was Bitcoin. 6 months ago, start of the year, it was the Mag 7. Like, you know what I'm saying? Like, there's always a new flavor of the month. 6 months from now, it's probably going to be the bond market. Oh my goodness, the bond market, the bond market. You want to get in when no one's talking about it. Hence the reason why I'm in TMF, by the way. Because yes, just like all markets, with gold, this is the time down the bottom here when gold did nothing, right? So what was that thing? You said here, XLE building energy for the last 3 or 4 years, as you said, exactly. And when that happens, we have 3 to 4 years of energy building. Then we typically get a big move, just like gold did, because it's the same thing. It's not nothing new. Why has gold had a big move here? We can make it. Oh, well, it's the debt. It's the Great Reset. It's the end of the dollar. We can come up with a reason why. Who gives a shit? All we have to know is it's done nothing for a couple of years, 2, 3 years. So if it starts to break out, that could be the start of a big move. Why? No one knows why. So who cares? Just there's a major probability of it happening. Make money. Keep it simple. Oh, let me spend 6 hours diving deep down the rabbit hole trying to figure out why. And at the end of the 6 hours, you still don't know why. Or you think you know why. Who cares? It just is. Stop trying to be smart and stop trying to use different things. A energy building phase is a technical trading pattern that gives you a high probability of seeing what the next move is likely to be. Energy using, energy building, energy using. Don't take a technical analysis and wrap it around some sort of macroeconomics. Now you're putting two things together that doesn't match. It's like we're taking a technical trading pattern and trying to overlay, well, is it going to be war that's going to call? No, the pattern tells us. Because that's what trading is, right? Trading is a technical thing. Trading the market is a technical thing. It's not an economic macro thing. So, crash will last 8 to 10 months. You may be right. But right now, it's not even starting. So that last 8 to 10 months, day one hasn't even started yet. So you may be right. It may last 8 to 12 months. Once it even just gets started. But we haven't even started yet. So forget the crash. Forget the word even crash. I'll tell you what, guys. Is it going to burn me? Is it going to load on me? Not going to load on me, is it? Oh, wait. I'll go back to the simple here. So I hope you can see, guys. Again, stop trying to be right and wrong and trade the probabilities. Trade the probabilities. Here's a pattern. Okay, let's go back to gold here for a minute, guys, okay? The pattern is what? If we're in a strong trending environment, which we are in the stock market, and we go through a sideways consolidation phase for a few months, and the bull market is, the moving average is trending up, which is like a trend indicator, momentum indicator. If the moving average is trending up and we go through a sideways pattern, right? That's called an energy building phase for the next leg. And there's a massive probability that when this energy building phase is finished, we're going to have another move to the upside. And then we go through one of these things here again. It's called the energy building phase. And the moving average is still trending up. It's just now building energy to what? To go for the next move. And there's a high probability because the moving average is trending up from here. It tells us there's a massive probability that after this energy building phase is finished, it's going to release the energy and we're going to go for another leg to the upside. And then we're going to. So if you guys are saying that about gold for this last couple of years, but then you're going to go to the S&P 500 right now. Where's my trend lines? Why did it disappear for me? It doesn't load for me anymore. Okay, anyway. You know what? Let's just... Actually, I'll bring up the daily chart for you. My trend lines are not loaded for me. Anyway. This is called... Oh, excuse me. Sideways, aka make new high on a big bull market. Guys, just keep it simple. And that's why, once again, if I go back to what I talked about before with the remember what I said with gold? What did I talk about? What did I say with gold? The moving average is what? When the moving average is trending up and we get one of these sideways consolidation pattern, there's a massive probability it's building energy to go for at least another leg to the upside. How big that leg is, we don't know. But there's a high probability we're going to see this here. Why? Because the moving average is trending up and now we're just going sideways here. And every time we get this pattern, there's a massive probability of seeing another move to the upside. That's called an amazing high probability trading setup. Rinse, recycle, repeat. Everything else is just confusing for Guzzy. Now, again, if you guys that have at least watched the replay and you've watched all the way through, I promise you, I'm teaching you something, just something simple. This is a high probability trading pattern because when we get this, think about this here for a minute. Look at the last couple of years. Every time through here, if we get this sideways pattern, it gives us a high probability it's just building for another move to the upside. And then another one of these guys. And then go to the upside. And another one of these guys. And then go to the upside. Same thing through here. Moving average was trending up. And every time we had these little drops through here, little sideways, little drop, maybe a little sideways, maybe a little sideways consolidation, but the moving average is trending up. It's building energy for the next leg, next leg, next leg. We don't know where it's going to go. We don't know how far it's going to go. But all we need to know is there's a massive probability we're going to see another leg to the upside. And then we can use then trade management to then manage that trade. And for you guys that have watched my videos for the last couple of months, you would know I've been screaming this ever since we got down the bottom here. I promise you guys, when we have a good, strong moving average like this here, and we have a market that goes up, right, like this, and we get this then with sideways pattern like this here, it's just going sideways, but it might be volatile. There is a massive probability, call it 70+%, maybe even 80% probability it's building energy for that next leg. How big that leg is, how much it goes, how far it goes, we don't know. All we need to know, there's a high probability that this is coming soon. And then sometimes it won't. But this is the reason why I always wait also for the break first. When we start to get a breaking of this here, when we get the breaking, that's when the move's likely to be starting. So if I can get this here, the moving average is telling me what's likely to come next. It builds energy with a big, strong moving average, big, strong trend. It's telling us, get ready for at least another leg to the upside. That's all we need to know for a good trade. Then we get into it, make some money. Rinse, recycle, repeat. Do it again, 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 and again. But then all you smart folks out there that are losing a lot of money, wow, the debt bubble and the great reset and the dollar's going to collapse and who cares about that stuff? You're a trader. You're trying to make money this year. And guess what? This is just not the indices. This is all markets. Why? So I hope you can see here, guys, right? Trade the probabilities. There is no certainties. And right now, if you are, and Ron Walker, mate, if you are watching my YouTube video right now, which you may be right now, probably not, but if you are going to be, you have a low probability of being right, of calling the top right now. You have probably about a 30% chance of being right and a 70% chance of being wrong. Why would you be doing something that's going to, when you know that most of the time you're going to be wrong? Why not just go with it and have most of the time being right? And again, guys, this video here for you guys today is to teach you some thinkings, some strategies, some mindset, the way of trading these markets, to have a successful trading career for the rest of your life. Not well, I made a lot of money on silver when it was going through a big move. Now I'm turning the shit. You called lucky, not a pro trader. Right. Also waiting break of short-term downtrend. Russell, short-term downtrend. What the? We're actually in a good bull market here. I think you're talking about the Russell. You do see this chart here? See this moving average? When the moving average is doing that, and it's been doing that for many months, going like that, that's called strong momentum, strong trend. So wherever that's pointing, go with that. Oh. Give me a thumbs up if you're enjoying this stuff, guys. Again, I have nothing to sell you here right now. My coaching program's closed. You can grab my book for free. You know, it's like, I'm just teaching you stuff, guys. Again, I'm not about me being right or wrong. I'm just teaching you things that really matter, massive difference in my trading career. And what I'm looking for on every, not just, crypto, stocks, individual stocks, gold, silver, right? It's just the same thing again and again and again. What am I looking for? I'm looking for some sort of strong trend and strong momentum, which simply means the moving average. Then if I can get a nice, good energy building phase, there's a high probability when we do break, we're going to go for another move. That's a trading opportunity. Rinse, recycle, repeat. The US will print, and the S&P to the moon. Peter, you're probably right. And actually, you're not probably right. I've actually done some videos recently where even Ray Dalio talked about this. Now, who are you going to listen to? Right? Look at this here. I want to show you this here. Let's actually bring this up here. Oh, are we still on? Yeah, we are. Let's go. Let me show you this here, guys. not sure why it's not. I'm pretty sure I'm still alive. What I'm looking for now, guys, is I'm just looking for that LinkedIn article that even Ray Dalio on LinkedIn, and things are just not working on my end. I don't know why. Even even Ray Dalio talked about stimulating into a bubble right now. What they're doing, they're stimulating into a bubble. So yes. Yes. So, and again, guys, what we want to do is we want to trade based off a probability of something working, right? We don't want to have a new idea. Well, let's go along the stock market because they're printing money. Okay, cool. What happens in 6 months from now when you're trying to look for a new opportunity? You're going to come up with another news story? See what I'm saying here? It's always trying to come up with something new. There's no foundation probability behind that. But if you want to have a successful year, we need to have something we know that we're trading most of the time. Yeah, we can go from there. So why are you in TMF if your bias is continuation? Wouldn't the continuation break to the downside? I'm trading the cycles. TMF is the cycles. Meaning there's a massive cycle that's at play right now. And sometime next year, this is a different situation. TMF is a different situation. The TMF trade is not an actual trading opportunity. It's more like an opportunity where I'm trading the cycles of things. Now, this is not even trading, right? It's more like an investing position where I do know we're in a cutting cycle and the rates are going to come down over the next 1 to 2 years. We're in that cycle right now. We know that. And when that happens, bonds are going to rise again. So that's what that is for. It's not I'm trying to make money for this week or this month. The US dollar is not going anywhere just yet. Let's have a look here. Yeah, actually everything is. So that's why. Why did it not build energy in 2022? Beginning, it built and then crashed. Most was made then. I'm not sure what market you're talking about. Why did it not build energy in 2022 in the beginning? What market? You are an idiot if you think the US dollar is about to collapse. No, not an idiot, Peter. Don't call anyone an idiot, man. No one's an idiot. It's just it's just their opinion. They can have an opinion. They can have a thought. Doesn't mean they're an idiot. So don't call anyone an idiot, man. People have their own thoughts, their own opinions. Now, if you trade off just an idea or an opinion, then that's the wrong thing to do. Professional trading is about using something that has a high probability of something working out. But don't call anyone an idiot, man. No one's better than anyone. No one's better than anyone. I'm not better than you. You're not better than me. No one's better than anyone. It's just, if someone like me who's doing well at a trading, and if you're not, then maybe you should just maybe learn a few things and then go from there. Something that's interesting about human psychology, there's believers who will keep learning until they succeed. And there's those who permanently skeptical, always looking for the confirmation bias. Yeah, and typically that confirmation bias is the herd mentality, and the herd mentality is always always gets in late. And when they get in late, then that's when the confirmation bias is most people, by the way. Oh, I'm not too sure about this, and they wait and they wait and they wait, and then they get FOMO, and then they get in, and then they lose money. John, you caught it last year about the metals. I hope you have position well. Yeah, I actually have. I have an investment portfolio, long-term investment portfolio for the last 5 years. I've been metals and miners, and now TMF. By the way, I've just added TMF to it. But I've been long for 5 years, guys, not just now. I saw this coming a while ago. Now, there's differences from investments to trading. In investment, it's buy and hold for 5-10 years. A trade is getting in off a trading pattern. And then guess what? And then having a high probability of having a trade over the next couple of weeks, couple of months. That's a trade. There's a differences, right? Completely different levels of ponds. One is more like I'm holding this for the next 10 years and I'm going to enjoy the swings. Cool, because I believe in this thing for the next 10 years, which I do. While, yes, and that means we're going to go through big bull markets like we're seeing right now with silver. And yes, I'm experiencing silver in my investment portfolio. And yes, we're going to get a big correction soon out of silver, wherever that means. If it's right now, if it's at 100, we're going to get a sharp correction and it's going to rip people's face off. And unfortunately, the herd mentality right now, which is most people, they're lining up to get the silver now. The FOMO is real. No FOMO. Russell, 12th of December 2022 daily. December. Okay, let's go look at that there. All right, let's go check out there. Okay, so you said here, I know what you're talking about here. So Russell, 12th of December 2022 daily, 2-link downtrend, wait breakout. This will move clear. Okay. Fiat is crashing worldwide. You may be right. And what does that mean? How do you use that if you're right? And at the end of the day, how do you make money this year so you can pull some money out and go live off, go trade tax, go pay taxes, go have a holiday, go buy some groceries with, right? So if it is, if you're right or wrong, how's that gonna? Because most of you guys that are here are looking to make money this year, right? You want to have a really good year this year. Cool. Well, who gives a shit about the dollar collapsing? Whether it does or doesn't. You just want to trade, make a nice profit, be able to pull some of that profit out and go enjoy your life with, right? Babylon has fallen, and you may be right. Not the US dollar, buddy. Look at you guys fighting. Right, wrong. Who gives a shit, guys? If you're focusing on that, but your idea is you're trying to make money this year, who gives a shit about the dollar? Oh, you're going to be right. Look at this here. Right, wrong. Ego. Right and wrong. What the hell is this right and wrong bullshit? When I say something's likely to happen, there's a probability of happening. Like the stock market. There's a massive probability. There's a more probability of the stock market making another big move, another big leg to the upside right now than not. Stop trying to put egos on your back, guys. Like this whole ego thing, right? I got it right. This like, who cares? NASDAQ. What do I think of SOFI? I'm not even sure what that is. What is that? Nothing's loading for me right now. And I don't know why. Yeah, I don't know. By the law of 1 ounce of silver, round is the only dollar. What? So silver's the hot topic now? I guarantee you're the same person who said 3 months ago that same thing about gold. And then like who cares about the hot topic, guys? Remember, we want to get into something before it makes a big move. If you're not in silver already, well then You missed out. But you know what the beauty thing about trading is? You know what the beautiful thing about trading is? There's so many more markets next year that are going to go boom to the upside that we can capitalize on. It's just not the silver. It's not just let's focus all our money and effort on silver, because if you are, that is the wrong thing to do. I believe commodities backed by crypto is coming. Commodities, geez. Cool. Awesome. Well, you do know that's only one position, right? It's only one market, one position. It's not, and it shouldn't be your entire portfolio. Oh, moves on earnings, not feelings. Right. Okay. So, anyway, traders, I'm going to finish up here. But for the few percent of you guys that are going to be around the markets in 1 year from now, this is for you guys. For the 90+% of you guys that are watching this right now, unfortunately not going to be around the markets here. And that's just the truth from there, right? So my only hope of doing this video here is that if we can just have some humility in our trading and our life, we're not the shit, we're not the king shit, I'm not the king shit, and we need to stay humble and say, right, like, how can I get better at this thing called trading, right? So therefore I can actually have a beautiful, bright future in this thing called trading. How do I really simplify the process so I can be around here for many, many years? And how you do that is just coming off the back of a high probability trading pattern that we can have a success most of the time. And that's all that this is all about, right, guys? If you are trading the markets right now and every single thing you get into is something different, it's the dollar, it's the great reset, it's the central banks. You're coming up with a story. Every time you got to come up with something new. There's no solid foundation of you being around the next 5 years doing really well at trading from that there. So anyway, guys, talk to you guys soon.